All right, guys, welcome back. This is the third video for building a weekly range. Now, I want to start this video off by going back to the week of Monday, the 18th of November, so a little earlier this month, roughly about 2 weeks ago. We had seen a week where a series like this worked very well. And what I mean by that is this week and even last week, we had a Monday higher low of the week. And that creates a tough environment to see the characteristics I'm trying to show you. That being said, we still were able to use these concepts to build this week's weekly range. It's just difficult because you keep taking out the same side over and over again, and you're not actually seeing how, you have a Tuesday or Wednesday higher low of the week and how the liquidity is engineered going into the next day and pretty much showing the pivot points throughout the week. So I want to start off by showing you guys this week, starting off on Monday, the 18th of November, and how it built the full weekly range and how it goes back and forth. And pretty much you're going to see the evolution of this one weekly candlestick on the right. So it starts off looking just like that, where we have our open, it creates a low, a high. I like this because it did not create the higher low of the day right near the close. They were both in sessions. So we have initial buy side and initial sell side. Everything between these points should turn to noise. Okay. We're not worried about what it does. You're going to see it's going to take a lot of time going back and forth. Gets close. This is all irrelevant trading right now. The first time it becomes relevant is going to be right there. Boom. We had taken Monday's low out. And now watch, we want to see, does price become a magnet right up into this high? Boom. So it delivers from the low end of the range right up into the high. And then obviously we're going to go and close off this day. And we have two new initial points of liquidity. And it's this high because you could see here right on the open of the new day. And actually the open's right here. This was the high of the day and it was made right in the PM session. You can see how it uses that buy side early on in the Asian session. Then it's going to use it in the London session to make its next movement. And you can see how it's progressing with these ranges. Takes a heavy drop down lower now. So now this, you always go from liquidity to inefficiency, from inefficiency to liquidity, right? So after taking out the high, we could look at this range, and you should never expect it to just keep going back and forth, back and forth. That would be a seek and destroy style profile for the week. And that's not necessarily the best environment to be in. It does make for easy trading because you're constantly running back and forth, but it's creating a consolidation style week. Instead, we look for things like this where now if there's any, 60-minute inefficiency on Tuesday's leg up, so something like this could have been a nice target for us for shorts. And you're blending inefficiencies, sessions, and these levels to grab your targets. And then from there, like I said, you're back in noise. You gotta remember, when you're between these points, it's going to turn to noise. So this now is our initial buy side, and we still have that same initial sell side in. We had added what we could label as a short term, and I'm going to take this off, a short term low, some other short term lows. But once again, between this point and this point is noise when you're building a weekly range. You're on Wednesday, so you have to consider this could be a potential low of the week, or this could be a potential high of the week if the weekly candle will be bearish. Now, since we already know this is a bullish close, I'm not trying to, say this is that or anything like that. You have to look at it as we want to see Tuesday or Wednesday create an opposing end of the range. What is more likely to get ran? So just based off ICT teachings, these are relative equal highs because you have a high and a lower high. And this was a nice purge on liquidity where you had a low, sharply ran, and then aggressively pulled off away. You retrace this range. So, in my opinion, I'd go into the next day looking at this level before I looked at this one. And like I said, you're still just building the weekly range. You would use our timing. So this is, London. So this is the London session. You could look for it to put an opposing end of the range on the daily end, right? There's nice low of the day created right in there. And then look at the delivery right up into that buy side and then look at that reaction. Boom, right back down lower. So you can see the sensitivity that lies between those daily pivot points. And then that day being done, you have a new end of the range. And now you're in Friday, where you should not always be expecting it to break outside. A lot of times it could stay within, it'll retrace back to 20%. Sometimes it'll just peak over one end of the range, and then it'll turn around and run for that. Thank God it's Friday setup. This Friday looks like it pretty much for the most part stayed pretty calm inside that range. And that's it. So I'm going to review this week, this current week, where we were at from yesterday to today. But I just want to show you guys how a building a weekly range ideal week would look something along the lines of this, where you're getting points that are being engineered, and you started off with these 2 points. And look at how you grew them into what was highs and lows of the week. And you're able to spot this could be a potential low of the week down below this high or down below this low. This could be a potential high of the week above this high. And that's what you're using to gauge, order flow from here up into here, or order flow from an inefficiency back up into relative equal highs or high of the week. So I just wanted to share that and give you guys a nice little rundown of what an ideal week looks like. Last week as well, poised a nice week for an ideal building weekly range characteristics. It just didn't have two, we'll call them extreme highs and lows of the week, where I mean, it didn't open and have a large body. It opened, created a high, low, and closed very relevant to the body. So this week, obviously, we have Monday's low. We had used this as initial buy side right here. We had ran it out on Tuesday. We had run it out on Tuesday. We had nothing to work with yesterday because of how close Tuesday's high was. It used that last macro, the market on close ICT macro, to print off the high of the day. So it made it very difficult. And when you have this type of thing, you want to think of something like this. See how when we started distributing here, it was very heavy and price opened, hit a very shallow low, and then quickly spooled higher to create that opposing end of the range. When you have something like that, you want to think of the same on the daily, where it opened up, it didn't really make too much of a low, and then just started spooling. They're hard days to trade, but the order flow in terms of order blocks, gaps, it's very clean. And you want to use your sessions to look for your liquidity runs of something exactly like what you're seeing here. 9:30 coming back down on, morning session liquidity, and then it continues its spool higher. Today, I will flash the news profile. You have 8:30 unemployment claims, but tomorrow is NFP. So the Thursday before NFP is usually a seek and destroy profile. As we stated, I had given you guys the initial range buy side labeled in red. And I also said keep an eye on that London low. And this is actually a high caliber Judas swing model I have where you have a previous PM session high or low. It uses prior to roughly between 7:30 to 9 to run this high or the low in an opposite case. But in this situation, prior to 9, you want to see it run the high, and then it should be like a magnet, just an absolute fall very fast into that London low. And that's why it's called high caliber because it uses sessions to engineer the liquidity and then uses time to run it and then expel the move extremely fast into the other session liquidity. So the reason I didn't use it today was just because it's seek and destroy. It could be very back and forth. It could spend a lot of time around these levels, and you don't want to be caught up in that, right? You'd rather see it take it, you'd rather see it run it, sit, and then just very fast shoot away. You could tell it was back and forth. It hung out around here for a little bit, and then it gave its drop down into that London's low. And seek and destroy being its profile, it's creating ranges and just constantly taking them back and forth, right? Just as it did, which is ahead of tomorrow's trading day. Now, if you guys remember, for this whole purpose of this weekly lesson, you have a new initial range buy side. Now, I would assume we'll probably see it, whether it's wicked above or trades very aggressively above it. We'll see that end of the range get taken out just because it's NFP. On a normal Friday, I do not look for us to be making a higher low of the week. I look for that to be done usually on Thursday. It does happen on Friday where you'll run it and then it'll fall back inside the range. But the main objective, right? So this is one for the notes. On Fridays, your objective is your thank God it's Friday set, your TGIF, ICT taught, where you want to see it retrace 20 to 30%. So this is a 20% marker. It's 25%, but very, very close, 20 to 30%. Just right in the middle, 25. I would not be looking at this as a target, but instead this as my target, right? So we'll go into tomorrow's morning session with that in mind. We'll measure wherever the range is at, and we'll use that. But in terms of building the weekly range, I still want to keep this up just so you guys could see how we've built this whole range. And we had, a good trading day on Tuesday, and we had what could have been a good trading day today, just not something I would want to take on NFP week. But that is how we are slowly building this weekly range. And like I said, next week I plan to do another one of these where we'll actually use each individual day and you should see it run back and forth. You normally will not get consecutive weeks putting in the Monday high or low of the range and then it doesn't run back on any previous day. So we should get at least one day next week where we'll use a daily candle as engineered liquidity, and then we'll show you guys how it creates a reversal and then can a nice continuation off of it. So that being said, guys, I hope you guys learned something. Have this on your screen for tomorrow. Pay attention to the Telegram tomorrow because we'll be in there talking over NFP and the protocol. So, like I said, a little bit of a bummer in terms of getting a low of the week on a Monday. This is honestly one of my least favorite profiles, Monday higher low of the week. And I hope you guys were able to learn a little bit and you guys were able to see the evolution and progression of building this weekly range and how each day it's just engineering itself for the next and it's using time and certain time elements to get there. Okay. So that being said, guys, I hope you guys have a great night. I hope you guys have been learning something in this and stay tuned for tomorrow and the next week where hopefully it gives us a nice, better layout and profile so we could expose this building a weekly range and how these are the actual points you want to be focusing on week in, week out.